Thanks for tuning in again, everybody. We're back with your favorite podcast, Luka's Tigers and Bronze. Oh my!
We're in Massachusetts, but we were.
Oh, you're on the East Coast.
Yeah, we're East Coasters. So
this is my co-host and the better half, Mr. Cage Lawyer.
What's up? What's up? As a Boston guy, I won't hold it against you.
I'm a New York guy.
Oh, nice.
Who's living in Boston these days.
Even better. That's tough. So then I shouldn't give you a hard time at all, because if you're a Yankee fan and you're living in Boston, forget about it. That's got to be difficult.
And a Knicks fan is tough.
Well, Knicks fan's tough no matter where you live.
I've got the blue and orange in me.
How'd the Knicks fandom start? I mean, I don't want to guess how old you are, but you know, if you have a similar story to me, I mean, I followed Ewing out of Villanova.
Absolutely.
And,
yeah.
So that was the deal. I remember watching the NCAAs as a kid with my mother, believe it or not, and you know, Ewing winning the MVP on it, and you know, my son, he's not a Knicks fan, but
neither am I.
Yeah. Yeah, I mean, I was at Ewing's when they retired his number. I mean, I did all that fun stuff. So
yeah, my favorite player growing up is a player that nobody really knew. It was a guy by the name of Anthony Bonner.
Yeah, knew Bonner.
Bonner played, and the reason for that was the Knicks used to practice at a university called Pace or SUNY, both, and we live like 5 minutes from there. So my father used to take us on like Saturday mornings and go to where the Knicks practice. And some practices were open, some were closed, but even at the closed ones, we'd hang in the parking lot and the Knicks would have to come out to their cars. Right. And so we'd get to say hi to the guys and they'd sign autographs and stuff. And one day Anthony was driving. Anthony Bonner was driving with, I think it was Derek Harper at the time, or Chris Childs, one of the two. I forgot who, but they were getting into the cars, but they were just given their new sneakers, and they placed their sneakers on top of the car as they were opening the door. As you know, we put a cup of coffee on top of the car as we went, and they forgot about them, and they started to drive away, and the sneakers fell off the car. And my brother and I ran and picked the box up and tried to stop them, like wave them down, and we did. And we explained, like, here's your sneakers, guys. Like, they fell off the car. And Anthony goes, those are for you. And
oh, wow.
That was super cool.
So as a kid, you size 14 sneakers, you were like, what am I supposed to do with these
things?
They
still don't fit me these days.
Yeah, but that's a cool story, though. I have a similar one, and we didn't kick off, but we're including this because that's an awesome story. You know, and we'll get into we'll do a mock intro here, but I have a similar one, and it'll allow me to make fun of my mother, which is kind of like one of my favorite pastimes. Yeah. But went to a Knick game. Oh man, had to be mid-90s. I was in college, so we were meeting my college roommate's family in the city. We were gonna go to lunch, the whole deal. And of course, you know, we met at Madison Square Garden. I think they were taking the Long Island Railroad in. So we met at Madison Square Garden, you know, in the front. And I think at the time what the team would do is they'd either meet beforehand, or they, you know, before the game, or they would do a walkthrough before the game, and then they would go across the street and all to grab lunch, grab food before the game, the whole deal. So we're meeting there, and we're literally standing in front of the Garden, you know, like right where the Penn Station, entrance is, and the Knick players are walking out, and this is hours before the game, which is cool, you know, like perfect timing of it, right? And you know, Charles Oakley walks out wearing like a huge fur coat, right? And coming down the stairs, my mother is like not shy. She'll just walk up to anybody. It doesn't matter who it is, right? So coming down the stairs are Anthony Mason and Eric Anderson. So you're a Knicks fan, right? Oh, yeah. Are there two more diametrically opposed Knicks ever than Eric Anderson and Anthony Mason, right? I mean, act a little different, look a little different. So, you know, my brother and I are like, look, it's Anthony Mason. And my mother, of course, you know, not being shy, goes and runs up to them. And it's Anthony Mason and Eric Anderson. And she runs up to Anthony Mason and says, "Hi, are you Anthony Mason?" And Anthony Mason looks down at this woman and says, no, he is, and points to Eric Anderson. And she shakes Eric Anderson. "Hi, Anthony. My kids are such huge fans of yours, Mr. Mason," like shaking Eric Anderson's hand. And we were just dying laughing. It was the funniest thing in the world. We'll never forget that one. You know,
so I don't know what's going on here, Luka Nation, but I'll kick this off for you guys. You know, we're trying to add value, and we have story time with Cage here. Maybe that should be a segment, but I'm so excited for today's guest. You guys have heard me talk about this many times, but I love people that have experience in industries that overlap. And I think the gentleman today is going to add so much value because of his experiences. He's worked in Silicon Valley. He's worked for private equity, and he's someone that knows sports cards quite a bit. And apparently he's got some swag to him. If you guys saw the hoodie he's wearing, very iconic guy. So without further ado, you guys are going to love today's episode. It's going to be a ton of value. You're probably going to listen to it more than once. Mr. Darren Herman, welcome to the Luka's, Tigers, and Bronzo My Show.
Oh my goodness, this is exciting. I listen to you guys, and now I get to be here. So I'm like, first time caller, long time listener, but here we are.
I love it. That's awesome.
I love it. And the hoodie, I got to wear it because it was a big week, or last week was a big week, and set the records on, these prices. And so I don't own one, or at least a 10. And so, I got to pay my respects to the hobby. So there you go.
I love it. So he's wearing an 86 Fleer Jordan on a sweatshirt here.
Yeah. Rally put
yep.
these things out. I think it was Rally put these out, and I saw it. I was like, I gotta get that. And so I did. And here it is. It's kind of cool.
Do you think that's a trend that's just starting, where sports cards and sports memorabilia is going to kind of overlap with apparel and culture?
I think it's intertwined already. Some of my favorite T-shirts, when I'm out and about, if I'm at like a Yankees game or somewhere, you see people wearing like the old school Topps baseball card T-shirts, or like, they've got some, cool sports, whatever. I mean, sports is such a big part of, sort of fashion. And it's intertwined, and now even look at, the way the players come to games, they're not
yep.
just, they're, and there's cards now, like, some of the cards just focus on player fashion these days.
Yep.
And some of the more expensive cards just focus on the player sneakers. And so I think it's like, it's all here, which is super cool. And I like wearing this, and there's times and places to wear certain things. And, I figured if I'm coming on with you guys, I got to bring my Saturday best.
I love it. My favorite card show shirt that I saw, somebody at a card show was wearing it. I don't know who made this. I have to find one, but somebody was walking around a card show with a T-shirt that said, "I have the cards your mom threw out." I'm like, that is awesome. It's awesome, right? Like, I have the cards your mom threw out. I was like, that's a great shirt, right?
Absolutely, that's so amazing.
Darren, how did you get into sports cards?
So I got in as a kid. Just growing up in America. It's kind of like a pastime. Although my father's not from America; he's from South Africa, and so I had no idea about sports cards. And so, for my brother and I, my brother's a little younger than I am. No one handed it to us. Like, we never had like a family member say, "I've got sports cards, here you guys go." It was more growing up just outside of New York City in Westchester County, and all of our friends started, getting some cards, and we had the Westchester County Center, in our town, and that's where once a month or once every couple of months, there's a very large sports card convention, and we would go. And, we took our allowance money. I think I had no more than like $6 every time I went to, the convention center, and who knows, we probably got ripped off by everybody. But we bought stuff. And, the one thing that I'll say from my childhood was, my mother, she was like a fanatic about keeping the house clean, like beyond clean. And so anytime my brother and I would take out our cards, they had to go away. But at some point, like as we were getting like 9, 10, 11, 12, 13 years old, we started to have a lot of cards. So my mom didn't really care about the cards, but she cared about, just get them out of my sight when you're not using them. So she bought us like all the binders and the plastic sleeves and the boxes. And so like the one thing she got like really right about the sports card space, and she taught by doing, was like clean up, which meant take care of your stuff. Yep. And so from like a super young age, my brother and I were always like sliding cards into like the binder sleeves, we're putting them in the top loaders. We were doing stuff. And, my mom had no idea what she was teaching us, but she basically taught us the right things. Yep. And, to this day, our card collection as kids are, probably in better shape than not perfect, but in better shape than not than that. And then life happened and, went away to college and did a whole bunch of stuff and kind of forgot about sports cards until sort of three things happened at once, or two things happened first, and then the third thing happened. First of which is I've got some kids. I'm a dad now, and my son is actually, he's 12 now, but back when he was 8, he started going to sleepaway camp in the summers. And the kids at camp were trading like Magic cards or trading like, Yu-Gi-Oh cards. And then came basketball. He's a big basketball fan. And so he's like, Dad, can you just mail me a pack of cards? Like whenever you write me a letter. And so, I hadn't bought a pack of cards in like 30 years, or 25 years. And I'd gone and bought some packs. This was like 5 years ago. So you could still buy packs of cards easily. And so I went to the store, didn't even know what to buy at the time, and just started sending them stuff. And on visiting day, I'd bring them more, and never really ever looked at what I, ended up buying him. And then I'd go for lunches, fast forward a little bit. I'd go for lunches.
I'm waiting, by the way, for the punchline. Darren bought his son, like, he has 173 Giannis 2013 Prism rookies in his camp.
He does have a Giannis, but he has a lot of Kyrie rookies. Yeah. Somehow ended up in that class. And the Kyries and some Kawhis. But anyway, I digress. But so I'd go to lunch with my peers. And I had a bunch of friends from business, but at lunch, you don't always talk about business. You talk about other stuff. And some guys were always saying, "Oh, I'm collecting cards. I've been collecting cards and collecting cards. You should buy this, this, and this." And I was starting to get back into it. And these are a lot of guys that you would know. And so I'd go for lunch. We talk, and they were mostly business, but cards would be on the tail end of it. And I never bought them. And then fast forward to Thanksgiving in 2019 is when I started to say, all right, this guy knows what he's talking about. He's got a big Instagram account. I understand this. And so I just basically went out and I said to my wife, I'm taking $1,000 and I'm going to buy as many LeBron James 2003 E-Tops as I can possibly buy, PSA 10s. And she's like, $1,000? She's like, Darren, how about like $50? I'm like, no. And so I did it. And I was able to buy 10 of them. And then January of 2020, I did the exact same thing with Luka. And so my wife is like going around the house and she's like, this is about February. She's like, you spent $2,000. Like, where's what are you doing? Like, what are you doing with this? And I hadn't looked at all at the price or the current market value of what these were going for. And then in about March, I looked and I was like, those LeBrons, have really gone up. And so the best thing I think I did was I sold a couple of them. I gave my wife her $2,000 back, and I've now been on house money ever since with pretty much the entire of the collection. So I got the bug through buying packs for my son and through some friends of mine who are collecting. And then the third confluence essentially was work. And so I'm an investor. That's what I do. And I help companies grow. And I like looking for areas that are kind of ignored, but there's excitement. So I got my career started in the video game space. From a business perspective, there's the video game industry and then everything else. And everything else ignores the video game industry. The video game industry totally gets it, and they're all excited. And the video game industry is also bigger than Hollywood and the music industry put together. It's what people don't realize. And so I like to look for areas that are off the path of everything else. And so for what I do, the sports card space is super interesting because there's so much time and attention and dollars already concentrated in the space, but it's kind of taboo. Like, I'm sure you guys have gotten it. Like, you're out and about and people are like, what are your hobbies? And you're like, I collect sports cards. They're like, oh, my kids do that. Like, it's like, I had that in video games. It's like, oh, I love gaming. And people are like, Like my 7-year-old does that. And I'm like, no, I do that too.
Darren, this is the first connection I made, but it's a great point, and it was super subtle. Is you're absolutely right though. Like sports cards are kind of a part of the video game industry.
Yeah,
they really are. Like when you play FIFA, you choose your favorite team and your favorite players, right? Except video games is kind of a waste of time, as my mom and dad would say, but who knows? Now there's people making tons of money on Twitch, so they were wrong.
Well,
I
got to manage that with my son now. My
like
son is like, Dad,
Yeah,
I got to get good for esports. And I'm like,
that's it. Well, I mean, the taboo angle is what we like because, one of the things Andrew likes to say is that, sports cards are going to be the next sports betting or fantasy. And, you can't escape a commercial for sports fantasy, sports betting. I mean, most states it's legal in now, it's on FanDuel, it's on, whatever. But you go back a couple of years, that wasn't water cooler talk. If you went to work and said, yeah, I gambled this weekend and I made $50 on FanDuel, people like that. Can I go to HR about that weirdo? You know what? He's got a problem.
Think about it this weekend too. Like think about how many folks do Super Bowl pools in the office. Some companies turn their eyes because you're not allowed to do it. So some companies like turn their eyes and it's like, all right, go do it. And then some companies are like, you got to shut it down. Can't do it. Yeah. We can't actively know there's a Super Bowl pool.
Yeah. Well, go ahead.
Darren, you mentioned it was an ignored industry, but it's not ignored anymore, right? We had record sales of the Jordan just this
Still
week.
Ignored, dude.
Ignored.
It's not ignored by me and you, but it's still ignored.
Dude, how much is Microsoft worth?
Let me get to the question.
How much is Microsoft worth?
You tell me. I don't.
Trillions of dollars. Trillions of dollars. How much total dollars are in the sports card space? Less. I'll be nice, and I'm going to say less than 15 billion.
Yeah.
So to go from 15 billion to trillion is significant. Now, I'm not saying the sports card industry has to be, $1 trillion from like a Microsoft. That's not fair. And all my, investment folks are probably saying, Darren, that's not a fair thing to compare. But when people still treat sports cards as being like taboo on the side, that's like, it's in the shadows. And yes, there are some early movers getting in from institutional investors, but I will tell you that the majority of investors still think that sports cards could be bought for 25 cents a pack. You get a stick of gum and, you can get lucky and get, a fancy card in there.
So I'm curious what brought the hedge funds and the private equity and the institutional investors in. And it sounds like it's just a prequel. It's not even.
Yeah, we haven't seen anything. So like where there's so little, in the grand scheme of things. So in the grand scheme, there may feel like there's like real action going on, but think about how many funds there are. We've got less than 1% of the total amount of funds that are getting action in our space right now. But why? So the question then becomes like, why would an investor get excited about the space? A hedge fund, a private equity fund, a venture fund, any kind of fund, they're doing what we call chasing alpha. They're chasing returns. And so the dirty secret though, that we all have to remember as card folks, I am first and formerly, is they will chase alpha until they can't find it. But the minute they can't find it, they're going to go somewhere else.
Right.
So as fast as money will come in is as fast as money can go out. So that's I need to stress that, because if we think that a ton of institutional capital is going to come in, which it's, dripping in, card prices will rise. And then if the card prices are, at a point like everyone's celebrating, which a lot of people are right now, if no more alpha can be found, that alpha is going to go chase something else. Nothing sports card related.
Does that transition happen quicker or slower than it would on the stock market, where it's where the liquidity is much higher?
So it depends. So when you're buying stocks, you can go in and out. We as retail investors, so retail investors being, individuals of us who are not tied to, we're not trading on behalf of a fund, we can go in and out in a day, in an hour, a second, whatever it happens to be. Big investors that aren't long investors, they go in and out, they close their books up by the day. And so they're coming in and out. And so
in and out, maybe hourly. He's always in and out.
Yeah, you can go
That's
by
what she said.
you can go faster than that. You can go by the millisecond, depending upon if you're Citadel or someone else like that. But the question though is the folks that are coming in now. So the folks that I'm aware of that have come into the space, which isn't my firm, but the folks that I have are creating SPVs or special purpose vehicles, essentially a fund, to go buy a selection of cards that they predetermined, and they're going to go and buy as many of those particular cards as they can and hold it for at least 5 to 7 years, which is the typical time period for a particular fund.
Okay, so let me stop you for a sec, right?
Because
listen, our guys are listening to this, and Luka Nation, which you are a member of, Darren. We love when we bring listeners on as guests, right? So Luka Nation sitting there going, okay, so what does this mean for me? And I want to unwrap this, right? Because it doesn't mean, guys, that there's venture capitalists, venture funds, there are mutual funds coming in and they're dumping their money. So that means that your Darius Garland PSA 9 is going to go up. Okay. No. That's not what that means. That's not what Darren is saying. Right. Okay. So let's just start there. Right. So let's see how we can provide some value here for the folks listening as to what the story is. So I'm going to unwrap it. We'll a couple questions. Number one, money coming in, doesn't matter who it is, but it's big money coming in. They are going to put money in with a runway of 5 to 7 years, as you said, and they're going to look to buy. Talk to me about the type of investment grade stuff that they're going to be looking to buy. And then with a sub question of, is that the reason we've seen some of the run up in the LeBron Chrome, in the Kobe Chrome, in the Michael Jordan? And then we'll go to the next question after that, which is is there a bubble? What happens when alpha is not there? So let's do question one and then we'll roll into two.
Yeah. So let's break it down to investing that we all understand, or at least a lot of us listeners can understand. And let's talk about real estate. Yep. So, some of us have been fortunate to be able to go buy homes. Some of us have bought apartments. Some of us bought condos, townhomes. Some of us rent. And so if you think about it, why do certain homes cost more than others? Usually 8 times out of 10, it's because of the location. That's right. Now, some locations become more in vogue over time than others. An example of that would be, you want a beachfront property. Usually that's the most expensive thing, like waterfront, beaches, etc. Problem is if the water comes in too much, you could have flooding. And so, 8 times though out of 10, that generally holds true. And so if you take that idea that the general premise in investing in real estate is get a really good location. There's other ways to make money in real estate. Yes, I understand. But the most basic way is location, location, location.
There you go. The top 3 things, right? Location, location, location.
Yeah.
That's it.
No one really loses money when they buy good location.
Yep.
So if you bring that idea, the simplicity of real estate, into sports cards, there's like 5 people that are location, right? It's Jordan, it's LeBron, it's Kobe, it's Kareem, right today, at least, it's, there's a 4, but you could probably add a 5th.
Shaq's not on that list, is he?
Who?
Shaquille O'Neal.
I don't know. I mean, his gold tops right now is shooting up through the roof. But Shaq's not on that list, I'd assume right now. But you pick those 4, and then you go pick their quintessential card or cards, handful maybe each. That's where the dollars are going to concentrate in the beginning. Why? Because, investors that are not in the hobby, so you can be an investor and not be in the hobby. You're just a money mover at that point. You're going to go find, the location of a home. You don't really care what the home is. You're just going to buy the location, and that over time that's going to go up. And so you kind of, if you think about the Jordan, the 86 Fleer, You know,
Great
that's
one. I want to hear your take on it. Let's walk through it. That's a perfect one. So talk about the Jordan.
So, you know, and it's on my, you know, right here, but like,
On your shirt.
you know, that's like that's like Park Avenue, New York City. Like,
Right.
you know, or was, you know, I don't know if it's so cool. I don't know, millennials want to live on Park Avenue, but you know what I'm trying to say. But like,
Yep.
you know, maybe it's Brooklyn now or something else. But, you know, that's the card. You know, this card symbolizes, you know, the childhood of pretty much anyone who grew up in the 70s, 80s, 90s, etc. And, you know, even my son who never saw Michael Jordan play damn well knows who Michael Jordan is and knows his greatness.
So a tangent on this, Darren, right? Because you're in there and you're the money. And so hypothetically, any one of the three of us on this call could have picked up that Jordan card a couple of months ago for $115,000. Hypothetically, I'll just throw a number out there. Okay. $115,000 this summer. Right. So then all of a sudden it sells for $2 million. And then I'm imagining the institutional money gets in, you know, the people you're talking about who want to buy that Park Avenue real estate.
He's subtle, isn't he, Darren? He's very subtle, this guy.
The next thing you know, the collectible app, you know, Ezra and his team, they're getting a buyout at $265 and they're saying no to it. Then the ones that are available for $3 and change on eBay get eaten up. And then you have Ken doing his thing and selling for $738. A Heritage auction just ended, right, for $645. What's the next chapter on that? Have these funds made their money in it, or now it's these funds that are buying it now? And because they're chasing that alpha, does that card now, are they putting a floor in for that?
Well, how many funds are there? There's more than 3 funds in the world.
I don't know. You tell me. That's why we're
so
here,
you know,
man.
if you think about it, you know, there's been what, 3, 4, 5, 6, 7, maybe 10 sales at that level. I don't know. I don't have the data in front of me, and you know, Ken or someone else has
only been 3. Only been 3, and then there's a couple, right?
So that means 3 funds, you know, have made.
Maybe one of them bought both of them. Maybe one of them bought more than one. You know?
But we know there's 300 of the card, right? Yep. And so, you know, that in theory that means, you know, 300. If everyone had one, 300 people will, you know, do well. But that's going to be the card, you know, a lot of folks chase. Because that just signifies, top, you know, cream of the crop, top of the pyramid, you know, a zenith kind of card.
Right. That's your invitation to the party. If you're a fund and you don't have one of those in your fund, no one's taking that fund seriously.
Well, or, you know, there's other strategies. You know, there are other strategies, you know, just like there's other real estate strategies.
Well, it begs the question, and that's where I'd love to go is, what are the other properties? So you mentioned Park Avenue, right? And Michael Jordan Fleer PSA 10 is the main property on Park Avenue.
Yep.
What's next to it? Is it a PSA 9 version? Is it what is the other iconic Jordan card with the Nike promo?
Oh, God, don't even talk about that.
Sorry, I apologize. Is it the sticker?
I like that card.
Or is it?
Everybody likes it. There's a lot more of them out there than people realize.
I know there's some fun though. I like the Space Jam one.
But you understand my question is, what's next to those? What are the real estate? Is it Michael Jordan in lower grades, but the same Fleer? Is it a different Michael Jordan card, or is it a LeBron card?
Selfishly, I hope it's the sticker, but that's just selfish. I'll just, you know, talk my own book there, but it's, you know, I don't know. And so, you know, if you stay in the Michael Jordan class, you know, one could say no one's talking about the star right now, you know, that no one's talking about that. And, you know, that a lot of folks would say is 1A. It's not 1, but it's 1A. And so that's a super interesting one. Or, you know, you can go into other rookies. Now the question then is, you know, do you go into other rookies or do you go into a lower, you know, grade of, you know, PSA or BGS or whatever? So, you know, I don't have the answer, but, you know, the question that I do think about is, you know, do you invest in, you know, the PSA 9 86 Fleer, or do you go buy a PSA 10 sticker or star or something like that?
Hey, let me throw it over to you. You're a Jordan collector. You've been in this hobby since you were born in the 50s. So, I mean, what?
You were born in 50. Yeah, I'm 72 years old. Yeah.
What does your experience suggest?
So I think it's already too late to buy a lot of that stuff. I think the 9s have already run like crazy. I was curious to hear what Darren thinks about the 10. I think the 10 is, you know, it's always going to separate itself because the 10, like I said, is that's your entrance to the party. You know, that's your you want to be taken seriously. That's your deal. The star has some issues. Rumor is that there are a couple of them that were graded by PSA before PSA stopped grading them, and that one might be hitting an auction house soon. Not a high grade, but a PSA graded star Jordan. I can't wait to see what that goes for, because that's just got a cool story to it.
Well, that will drive the entire market for stars.
Yeah. So, and you're right. And I have a star. It's not a particularly high grade star, but there are no 10s. There are no BGS 10s. No pristine black or regular 10. There's only a couple 9.5s. There's a bunch of 9s. I have an 8.5. It's an 8.5 with 9 centering. No, there's only a dozen of those. So, I paid a premium at the time. I bought it 2 years ago for 9 centering.
You bought BGS?
Yeah, I got a BGS. My only BGS card. It's my only BGS card. Because Star was a BGS thing. I mean, the BGS was the only one that did Star. But that card's run already too. I mean, I'm telling you, I paid $7 and change for it, and the last one sold for like $40, and I think that's probably cheap. I think Jordan. I mean, listen, Darren, you may have a better handle on this. I mean, it's the cards have run. But I think you're right. I think Star will be the next one that runs. I think that sticker one just sold for like $200,000. On eBay. I think you might be saying, and I don't want to put words in your mouth, though, that if there's more institutional money coming in, that Jordan card at $700,000 might be cheap, because the other people might be coming in, and that might be a might be a 7-figure card soon when somebody else needs to come in and buy.
I think if Mike Trout,
right,
is a 7-figure card, that Jordan Flair will be above anything Mike Trout.
Really?
Yes.
All right. Well, then with Trout, I mean, Trout sold for like $3 million, the auto one, because there's so little of them. There's so few of them in good condition.
10s. I mean,
of Michael Jordan. Yes. Listen, I get it. I mean, it's astounding to think about it, because I'm telling you, I got back into the hobby heavy maybe 3 years ago. And literally, if you wanted to, if you had $200,000, you could buy 8 of those on eBay. They were $25,000 all day long.
When the Jordan was at 100, before Patrick, sold his, but was going about $150. I went down to my wife and I was like, "We're doing this." She's like, "Whose couch are you sleeping on?" And so I did not. And so, but I completely do think. But
Darren, what if you came to her with the same question but said, "I want to buy one stock of Berkshire Hathaway"? Same response? One share?
No. She knows I can't do that, though, just because of where I work. But
yes.
It wouldn't be. Because for exactly the reasons we opened this whole conversation with, which is sports cards are still taboo. Most folks don't get it. It's not a priced asset yet. And people can wrap their head around buying, U.S. equities like Berkshire Hathaway A or B easier than they can wrap their head around buying a 1986 piece of cardboard. For us in the hobby who live and breathe seeing cardboard every day, we understand it and it becomes second nature. But to folks on the outside, it looks like we're collecting pictures of guys in shorts on pieces of cardboard.
And in the 80s, they were shorter shorts too.
Or women with the WNBA cards are super cool too. So, it is what it is.
So what you're saying,
I only buy Dogecoin and cannabis stocks, so I don't even know what equities are.
If you buy at the right time, you're doing good.
But talking about taboo, let's talk about cryptocurrency, Top Shot, and NFTs. Because those are really taboo, but they're gaining some popularity, and it's a hobby sub-industry that Cage likes. And I feel like, Darren, you have a ton of experience or understanding that. What do you make of Top Shot and blockchain moments in general?
So it's the unpopular opinion, and I know that. And I'm fine taking it. I don't get it. It's just me. I don't. Now, separate cryptocurrency away. If I just stay within NBA Top Shot and similar blockchain type cards, I personally don't get it. Let's separate personal and professional for a second. Personally, I like to touch, feel, and hold things. I grew up buying vinyl, I read books, I have bookshelves. I like to touch and feel, and I like to know where my assets are. Now, one could say I own stock, and they're like, well, you can't touch that. And I get it. Okay, I get that. But, it is what it is. And the other part is, do I need to own a video of something that I can go find on YouTube or, somewhere? No. Now, so that's the personal side. I don't get it. Now, from a professional side, is investors are basically people who study humans and try to predict moves. And sometimes you predict them right. Sometimes you predict them wrong. If you want to keep your job, you've got to be more right than wrong. And so when we study humans, what I'm trying to, professionally understand is what's really driving the motive here. A lot of folks have said that these are all Robin Hood folks that are coming into the space that are used to just buying through, quick interfaces and moving into the space. And they see the Top Shot packs and cards and, whatever as, an easy sort of entry. It was very cheap, a month ago, even cheaper before that, and an easy way in and owning things like that. And a lot of folks are saying that, it's a younger generation that's super cool in buying digital assets. Like, they don't have to touch and feel, like, that you grow up playing, I don't know, whatever, and on a video game, and you're cool spending, virtual goods or microtransactions or whatever. And, you've got your bank of all your skins or all your whatever and said video game. I get it. I come from the video games. I get that.
This is what I wanted to hear from you, because you're a video game guy.
Yeah,
because, I mean, to me, it's what's the difference between playing Fortnite and having your skins or playing another video game where you're buying a treasure chest and you're
so
you have
for
all
me,
this...
it's like I'm playing Fortnite. Like I'm running around in my skin. I'm able to like do something. Whereas like with a Top Shot, and I'm not like trying to like poop on it on purpose, but like I'm not going to sit there and watch the same RJ Barrett dunking like 50 times. Like, how often can I go do that? Like, at least in Fortnite, I'm playing with 99 other people. They all see my skin. There's some, brand equity, badge value, some ego tied into what you choose. Whereas like Top Shot is, I've got a clip of Barrett dunking that's sitting in a library that, yeah, I could show other people. Other people can see my collection, but like, so I'm not actively using it in a game with 99 other people, like doing what I'm doing. Like, I don't.
Would it change your opinion if you thought that those moments were something they'd be able to utilize in like a fantasy type thing, where like maybe. They load this? Because I think that is they're a beta, but I think that's one of the things they're talking about. Like you can use your moments to build a fantasy lineup,
which would be cool, right? Like
something different,
and stuff like that. And the evolution. Like if we think about the evolution of an image is a moving image. And so, and we know that, there's, the image and then the moving image, and the moving image is a huge industry in every which way it can go. And so one could make that argument. And then 10 years, if you look back on this 10 years ago, you say, oh, Darren Herman's a fool because, he wasn't, getting in early. Professionally though, there's money to be made there though, but it's like high risk, super speculative right now. But that's not saying it's a bad investment. It's a bad investment if you're not okay for the risk. So any investment can be a good investment. You just have to understand the risk that's associated with that investment. So what I tell people, like I have like friends and family and whatever that's getting into cards, and I say, just like you have your portfolio in your real life for how you manage your money, you have some of your money wrapped up in low risk stuff. You have some of your money potentially, into high risk stuff, and some in between. Just manage for that the same way in sports cards. And so, I would look at Top Shot. I don't own any Top Shot right now, but I would look at that as, something super high risk. But I know many people on it. And I've got one of my best friends is super into Top Shot. He's made a ton of money. And
unrealized.
Yeah. Well, he's not able to pull it out of the system yet because it takes however 8 weeks.
No, but I mean, there's so many good points here, Darren, and I could already tell that you're going to be someone that we would love to bring on for, a sequel and then a Star Wars 3, because every one of these topics, there's so much depth that we could go into each one. And Actually, we recorded an episode just recently where I said that I think Bitcoin in today's world is actually the safest investment. And that's my hot take for everything that's going on there, because there's so much speculation.
Yeah.
And we often look at the reward, what's the potential upside of something, but we don't look at the downside. And I think with the printing of the dollar, something that has been genuinely accepted as kind of digital deflation or hedge against inflation, I said that my hot take is Bitcoin is the safest, but I agree with you 100%. Top Shot and other cryptos are very speculative. I want to touch on something, and I think you're going to give us a perspective that we've never had before, because, and you mentioned this, and guys, we'll drop this at the end of the episode where you can follow Darren, but he does an amazing job to create a community around the hobbyists. And he had an amazing Zoom live just a few days ago that I usually don't join these things because I want to keep my mind clean and when I have original takes, but I learned so much. There was some of the smartest people in the hobby on this call. And you mentioned something great. You said, the way you can know if an industry is maturing is by the startup activity that's going on in that industry. And Top Shot is just one startup, right? There's StarStock, there's tons of, and you know this better than most, a startup is only as successful as the founding team, not the idea, because the idea iterates over time.
We all have a lot of ideas.
What are you seeing from a startup perspective? You're an ex-Mozilla guy, you've been Silicon Valley, now you're PE, in terms of the businesses that are forming around the hobby.
It's exciting. Like this. So this is where I've been investing within the sports card space. So I have like my sports cards, then I've got sports card company investments. And the simple thesis is twofold. First part is there's already time, attention, and dollars in the space. We talked about this a little earlier on in the podcast. There's already time, attention, and dollars. There are very, very few spaces to invest in startups where there's already a $10 billion market. Like most startups have to create their market. Like this market already exists.
Yep.
The second thesis.
Example is Coinbase. Crypto was just in its infancy. So Coinbase
had to create that from like that they had to do a lot of work to create that business, and they did an amazing job. But they had to do a lot of work. My first business, my first startup was an in-game advertising business. In industry terms, we basically built DoubleClick for video games, like an ad server and content servers for virtual goods and stuff into video games. I walked into ad agencies to tell advertisers that they can now dynamically, insert their ads in video games. They're like, what? So it was like hard. Like that was a super hard business. The second part of this thesis, which plays to the first, is we have like 10-ish, maybe more $1 billion in the space, but so little infrastructure to the space. Like there's some awesome platforms out there, Card Ladder and Market Movers and StarStock and Loop and all, like there's some, and sorry if I forgot you if you're running a platform, but there's some there's some really good platforms out there. But there should be so many more for the amount of dollars in the space. But then the second part of that is, other than like Jeff Wilson, everyone else has a hard time at finding, how do I get the investors to back my platforms? So there's so little investment dollars that are going into the platforms out there. And so my thesis to the whole space is we can have so much of a better experience. Like Mark Zuckerberg talks about building, or Elon Musk talks about building 10x experiences. Like if it's not 10x better, don't do it. Not 10%, 10 times, like 10x.
That's why I partnered with Cage. He's 10x better than anyone I've ever met.
And so the opportunity for the sports card, he is like the opportunity for the sports card space is 10x experiences, because what exists today, like you're doing a break on Instagram where you're watching someone on a janky video, and then you have to leave in Venmo and Zelle or PayPal. And then if you do PayPal, gosh forbid these days, like you'll get your account canceled. And then you got to come back in, wait in line. You don't know the line. There's a 30-second lag, like all of this stuff. It's like super janky. So my whole thought as an investor is go build those 10x experiences. Like just go do it. Like just make the breaking experience better. Like, and that's just one. And so what now we see is, people are starting to look at where the money is concentrated within the space. There's the grading area, and now there's all the digital graders coming up out of the woodwork saying, I've got digital grading tools, and I think that's awesome. You've got, as I mentioned, the breaking space. You got video and content or commerce platforms that are in that space. You've got some new companies that are popping up that are trying to transition the sports betting dollars into the sports card space. Then you've got like all the fractional guys and gals like over here. And you've now got the sort of marketplace 2.0s sort of popping up, which is sort of eBay's, game to lose. And they've been a sleeping giant for a long time, but I will say starting to see them wake up and actually show that they do realize that they're probably transacting $10,000 a minute of GMV going through their platform, and so they're starting to wake up, and they're doing things behind the scenes that are starting to bear fruit. But there's still lots of rooms for marketplaces, and so there's still plenty of opportunities.
And yet there's only one good podcast out there for all this growing stuff. It's just us.
Such a good one.
There's just one. That's it.
You guys and 500 your peers are amazing. And
well, I actually think the content game is just starting, but I'm curious, if there was the opposite of infrastructure, like are things like what PayPal is doing, for example, shutting down accounts, freezing money, acting like a bank, but then not playing by the rules of a bank. Does that hurt the hobby?
It's not that they're not playing by the rules. I'm not sticking up for PayPal, but they're, we can't, if you want to go into it, Razes are not exactly legal. and so, in all states, and, there's a lot of sort of gray area going on, and PayPal,
I think they are playing by the rules. I think PayPal is upholding their rules. It's just people don't like the rules. That's probably the better way of saying
you
it.
said it 50 times better. People don't like
Razes should be shut down. There are a lot of people who don't Raz that PayPal throws under the bucket of Razzing.
Yeah. And they're not gonna get it perfect. I'm not sticking up for PayPal. Don't get me wrong. I'm not sticking up for PayPal. But there's some shady stuff that does happen in the sports card space that does bring people joy, and it's great, and the experience is awesome. But there's some gray rules there. And I don't make the law, and I don't want to make the law, and that's the last job I ever want. But
I'll take it. I'll make the law. Let's go.
But it's it's there's some stuff that happens that bends the law, and so these big companies like PayPal and others kind of have to I can tell you they make a lot more money outside of sports cards than they do in sports cards, and so they got to just protect themselves.
Yeah, curious though, from just really specific, and we'll keep moving because I don't want to spend too much time on PayPal. If you do a Raz and you end up with no cards versus if you do a break and you end up with some cards, is there a difference? Is one gambling and the other not because you leave with something?
I don't know.
It's very blurry though, right?
Yeah, it's super blurry. It's super blurry, and I don't ever want to be a lawyer and stuff like that and prosecute that stuff, but I understand the rules and stuff around it, and it's been happening for a long time, and it brings people joy, and I watch them, and I've probably participated in a bunch, and they're cool and stuff, but it is kind of gray.
So curious, let's say I'm sitting out there, I'm someone in my early 20s, I don't have a ton of money and capital, but I'm ready to put the sweat equity in, and I'm a product guy. What's a product that this hobby could benefit from that hasn't been created yet?
So if I were to leave tomorrow to go build something, it would be, I believe, and I'll put my thesis out there. Anyone who's building, please come see me. I still think that card management solutions are absolutely needed. Now, this doesn't matter if you have 10 Grail cards and nothing else. Put that aside. But if you're in the hobby or you're getting into investing and you have hundreds, if not thousands of cards, and if you have 100, you're going to have 1,000. And if you have 1,000 cards, you're going to get to a lot more than that at some point in the future. And so what we need is not a Windows 95 solution. We need a modern solution to sports card inventory management for the collector that gives you price accuracy and market value of your cards, and not just the Jordan EX, that is like a nice card, but gives you value of, the Jordan from the 91 or not, whatever, 92, like Skybox series that nobody really looks at the value of. But, you want, like, so the issue that I have with a lot of the platforms out there, they're all amazing. Card Ladder's awesome, or Market Movers is really good at charting stuff like that. But they only look at the top 20,000 cards or 15,000 cards. And, as a collector and frankly, as a hobbyist, which I am first and foremost, I don't always have the top 20,000 cards. Like some of those I don't get excited about. I get more excited about, the 79,122nd card. And because I like the design of it. And so I need a platform that can, help me understand the value of all of that stuff. And then facilitate, trading, facilitate buying and selling, facilitate a chat network, facilitate a whole bunch of stuff. Like I love that. And that's an area that I get super excited about. And once you have the cards, you have the biggest data set in the game. Like, everyone wants that. Well, that's the biggest data set. You have the cards and you have the value of the cards.
How much of it is an issue of most other asset classes are instant ownership transfer vehicles where sports cards are instant ownership, but treated as goods sometimes? How much does that make it really difficult for founders and business people?
Well, first of all, sports cards aren't an asset class yet. that's a key thing that we got to remember. Sports cards are sports cards. And, they're not recognized as, financial assets.
And we're talking about by the SEC, right? Because you mentioned an investor, someone who studies human behavior. The other side of the coin is they actually are accepted by the general public.
Starting to. But if you were to go to the mall, I just picked the mall because it's just like a heterogeneous group of humans in one place. And you were to say
that's where your guys' generation grew up and picked up the ladies and things like
that. Exactly. We hung out in front of, what is it?
Orange Julius.
I was wearing my sunglasses. Yeah, Orange Julius.
Sunglass Hut.
Yeah. We're not talking about your imaginary friend, Cage.
But if you go,
I wish I had a friend named Orange Julius. That's a good drink, man. Forget about it. Now it's Chick-fil-A.
Yeah, that's. 100 people at the mall, about sports cards. Are these an investment? Would you invest in sports cards? I guarantee you, if you have a real cross section of people, that probably, at least 50 of them would say no. Those are in my attic, kind of thing. And so, it's not widely accepted yet. But if you, the folks listening to this podcast all would say, 99% of them probably would all say so, because, it's just the audience that, is listening here. But it's, I would just be careful on the assets, because when you really think of it as an asset, then you can talk yourself into, stability, and there's liquidity for the asset. There's not always, I just see too many people buying like far left or far right cards. I don't know. I saw like a Baisley gold something going for like $4,000 the other day. I was like, that's not going to end well. And so I just be super careful with, what we're all buying out there and what we truly consider the assets, within the space.
That leads to my next question. And
actually, great advice. It's great advice.
Agreed. And Cage, I know you got to drop off in just a few minutes here. Don't worry about it. We're going to have Darren back on because, there's so much knowledge here and we have to go in more depth.
No, I love the institutional stuff, man, because this is something you talked about in one of our first episodes, the difference between retail investing and institutional investing and how the hobby hasn't even seen the institutional money come in yet. And it really has just started to trickle.
Zero emotion in institutional.
Yep.
Zero emotion. It's where can I find alpha and get me there quickly. And
so for the retail,
and you go out.
So for the retail investor, the little guy, the guy with 500 in his Robinhood account, what would make him or her successful? What advice would you have for that person?
The advice is literally to sit down with a piece of paper and say, where do I want to be in like 5 years or 10 years? It's the exact same thing you do in financial planning for any other thing. And say, what does my risk tolerance need to be in order to achieve that? And then you put together your portfolio of cards that way. So, you definitely want to like base yourself in some cards that are the least risky ones, but they're going to appreciate, 5%, 10% a year and kind of get you going. You're not going to lose the 5 to 10%, but you're going to get there. Like there are very few Michael Jordan cards where you're going to lose, right. Or LeBron cards right now where you're going to lose. And then you probably going to have some level of risk to the portfolio. As most people in cards today are younger. And so, when you're younger, you can afford to take more risk. And so some percentage of that portfolio will have some speculatory components of it. Now, some people find, or I find a lot of people find the speculatory components of this game more fun than the other side, sort of the boring, buy a card that's just going to like kind of go up over time. But it's the combination of both that is what's important to an investor. And so, you're managing for risk and you're having fun at the same time. And you can have, 2 or 3 different strategies and you can go do it.
What's interesting, and our previous guest, guys, if you haven't listened, Asian Cards, Raymond Lee talked about this. He had brought up a good point, which is what's counterintuitive about the sports card hobby is the perceived lower risk cards actually create more alpha, where in the traditional stock market, it's the reverse. But oftentimes the retail guys are priced out of those really high-end iconic cards. Is there anything you would want to say to them on that front?
Go find your way in through fractional. So, I'm not, saying collectible or rally or Otis or, sorry if I left one out. But you can build your portfolio also through that type of stuff. So if you only had $500, you could take $125 or $150 of that and go fractional into a 86 Jordan. I don't think you can lose there. Like that is like a municipal bond. Like that is like, you're going to be pretty safe there and it's going to grow. And then
let me ask you that. $1,000. You're telling people don't go buy whoever the hot rookie is right now. Don't go buy a Tyler Hero card. Don't go buy I'm sorry, Andrew.
What has Hero done to the hobby?
Don't go Tatis.
What has he done to people?
You're saying the better way to do it, and maybe this is because you think this is where the institutional money is going to be, is take that $1,000 and buy a share, buy a piece of that Park Avenue real estate, buy a piece of that Michael Jordan.
So I have 2 answers.
Please, I love it. Have 3.
First answer is if you're purely investing.
Yep.
And you just want, slow and not slow and steady, but you just want steady. You want to, keep it simple. You don't want to worry about it. Put the $1,000 into that Jordan, I think, or a 2003 LeBron. I think it's very hard there to go, or a Kareem or someone like that. But Andrew, and Kane, you and I, we all grew up watching people like Cedric Ceballos or Harold Miner.
Yep.
Or
Baby Jordan.
All these people at that moment in time were going to take over the world.
Yep.
I can go to my basketball binders as a kid and show you all of the players who in today's world would be like a Tyler Hero, a Baisley. Who knows? Maybe those guys can break out beyond it. But at that moment,
Darren's a dunking fan. That's what
yes.
Those are 2 guys who won the dunk competition. So I don't want to miss that, but go ahead.
And I have them. But I went huge into those guys back then. Yep. And now I probably couldn't even get a nickel for their cards.
I have a basement full of Eddie Jones.
Exactly.
One thing that people miss, so when you invest in stocks, you can make money on the appreciation of the asset, but also on
the short. Yeah.
Right.
Oh, we learned about that recently, didn't we?
The challenge with that, when people say go invest in a Jordan Fleer, right? You don't actually make money on it until you sell. But with the day trading of the prospects, you're able to make profit and reinvest. And I think that has.
I thought you were going to say something else, which maybe I made a bad joke.
Sorry.
Yeah, shorting.
He was bringing in the GameStop of it. Which,
Yeah, I was
by
going
the
to
way,
bring in GameStop and AMC and everything else, which
Please give
but
us your take on it. Please.
I think that's scary. By
If
the way,
I
that
could
brings
short
the SEC
in the sports card space, game over.
Yeah, a lot of people who are in the sports card space don't want that SEC. What's gonna govern shorting it? Is it 33 Act, 34 Act, 40 Act? Is it Reg 8A? What are we
I don't know, but there's a
the
lot of
SEC
people buying today's Cedric Sabaloses and Eddie Jones and everything else that I would love to take a counter bet on.
Yeah,
it's not that I don't like the players. I like the players that give me joy on television, but they're not Hall of Famers.
Right. Yeah. Well, I mean, it depends on how long you're planning on holding your short position for. Are you doing a Citron here? You know, are you Ackman? You know, is this an Herbalife short?
There we go.
But
the counter to that, and you know, I have a couple friends that would come counter me right in, which is you have to speculate in order to get that future Jordan.
Mm-hmm.
So you have to sort of sow enough seeds and have, you know, if you're going to get in early, you know, you got to sow enough seeds into a rookie class in order to see who's going to break out and then ride that wave. So if I take like a fund analogy, in venture funds, they usually have, so in investing, the most riskiest asset class in investing is venture capital, usually the most risky. And it's also the earliest stage. So you're investing either as a company is an idea and not even a team yet, or maybe it's a little bit of a team and hustle and they got like some monetary traction and then you go and, you know, make it big. It's how, you know, all of us listeners, you know, heard about Facebook and Pinterest and Google. Those were all like venture funded businesses way back.
But not the 99% that failed, right?
Yeah. And oh, by the way, 99 yeah, as Andrew points out, almost everybody fails. But with that said, venture capitalists, if you step back and think, you know, how are their portfolios constructed, right? Because they're the riskiest class. They have to make a lot of bets, and they have to make a lot of bets that have tremendous upside opportunities. So a there's very few, there are a couple, but there are very few venture capital funds that are happy with doubles and singles in baseball analogy. Like venture capital funds in every single bet have to bet for a home run or a grand slam. And the reason for that is because 99% of them are all going to fail. So the two that succeed need to be home runs or grand slams. And so, you know, that could be a thesis that one would have in the sports card space, which could be, all right, go buy a prism of each of the players in the rookie class and do that for 5 years straight. And so you have, you know, the potential, you know, to have the breakout athlete rookie card prism. If, you know, 86 was Fleer, 2021 is probably Prism. And so, you know, you kind of want that card, and that could be an investment thesis.
I love it. Tell me, what, you know, if someone asks you, what's your state of the union for 2021 in the hobby? You know, what would you say? What do you think this year looks like for the hobby?
I think it's like continued excitement. You know, continued momentum, continued excitement. I think that, you know, basketball, you know, is driving quite a bit right now. Football, I don't think lived up to the expectation that a lot of folks had. It still did fine for many folks, but I don't think football saw the overall anticipate like what everyone thought. Mm-hmm. Baseball seems to be, you know, getting exciting right now. And I think that, you know, for 2021, it'll be similar to 2020. What I worry about is 2022 and 2023. And so my concern, and again, I am long on sports cards. You know, if I could show you everything around me is sports card, like I am long on it. So I don't want people to say, oh, you're a hater. I'm not. But I worry about a year after we all go back to work. Not saying that we're not working right now. I worry a year after we're vaccinated and we're out, because a lot of our financial decisions right now are fairly simple because we can't do a lot of things. Like humans cannot do many things that we could do 2 or 3 years ago. And so like if I have like $200 of free cash flow this month, I'm not going to dinner with my wife. I can't go to dinner. Like I physically cannot go to dinner with my wife right now at a nice restaurant because they're they're takeout only. Or I can't go to the movies with my 2 kids or go to a Celtics or Knicks game. And so, what a lot of people are doing is they're using their $200 of free cash flow and saying, oh, let's go pick up a couple of cards. And so I want to see decision-making when, we're back, at least 6 months after we're vaccinated, the sports leagues are back to their schedules. Like the schedule is also helping drive the excitement of the leagues right now because there's so little downtime.
I agree.
Basketball had like so little downtime. So I want to see like basketball get back to normal schedule. I want to see, the normal cadence of life come back. I still think that sports cards will grow. And we will still see people going to the National at record numbers.
Right.
But I don't think that we're going to see the crazy appreciation of cards within such small periods of time.
So
I just don't think we're going to see that.
I'm curious though. Behavior change is one of the most difficult things to create, right? Like habit changing is really difficult. And I think what COVID forced is a tremendous amount of habit changing. I used to go and get my exercise at the gym. My gym's closed for 30, 60 days. I'm like, what is going on? I just got hit by a brick. But then you realize, wait a second, I could do a lot of this stuff at home. I could go in nature. So we've changed a lot of people's habits. I'm curious if we're actually ever going to change them back.
I think a lot are going to go back. I think some are going to stick. The one thing that I've seen in a lot of the research I read is folks, us as humans cannot wait to get back out again. We can't wait to go to the bars. We can't wait to go to the concerts. We can't wait to go, there's going to be, rather than in like, an inward face, I'm going to be home, in my home or apartment or whatever, I can't wait to go out. And so, you got to be long on a lot of those sort of outward opportunities. And I think, sports cards for many folks are nice, but they're not must-haves. And so, if I haven't taken my family, I have not taken my family on a vacation in over a year. And I'm not saying it has to be a crazy vacation. Like we haven't even driven like somewhere to go. And so, if I go do that, that's hundreds, if not thousands of dollars. And that money has to come from somewhere. I don't have a tree in the backyard that has dollar bills. So I got to pull it from somewhere. And, does that mean that I'm not buying, name a card? I don't know. And so, I'm not saying that all dollars into cards are going to go to zero, but I do think that there's going to be more demands on the dollar of our bank accounts because we can, and say, hey, that Dave Matthews concert this weekend sounds a lot better than, going to buy, a T-Mall, status box. I don't know. And so I'm going to that Dave Matthews concert.
You got it.
So does the top end suffer? Like, how do we reconcile those two, right? How do we at the same time say, well, this institutional money's coming in and, buy the blue chips and buy the part? I'm sorry. Are you calling me obvious, Darren?
No, I know. It's a super astute question. I think the top, you can't go wrong on location. It's like location.
Right.
I think the hard part is, the fringe, where people are making good money today, and this stuff around the sides, those will probably deflate a bit.
So we've had episodes that we've titled Flight to Quality, right? So I think what you're saying is at some point in time, the fringe stuff will get pared back and people will be faced with, decisions within their own portfolios.
Amen. And I don't think it goes to zero. Nope. And I don't say like, I'm not going to stop collecting Victor Oladipo and Domantas Sabonis and, Nikola Jokic or whoever, Like one of my collecting theses are big men. No one likes collecting big men. I do. And I know they're not the most valuable, but I find joy in collecting big men because I'm a small guy. So I need to compensate for it somewhere. And so, I'm not going to stop, but I'm probably going to pare it back a bit is kind of, what I'll do.
Last thing, how do you reconcile? So, you talked a little bit about research just a little bit ago, and, research used to be done by like the McKinsey, they'd have this robust, still are. But now everyone with their smartphone and their blog spot could also produce research. How do you reconcile with all of this data creation, all this content creation? How do you, sift for just those gold nuggets?
So anyone has access to data. So, anyone who is a couple of clicks, can go access a data feed. It's interpreting insight from the data is where the money is made. And this is not like an advertisement for McKinsey or Bain or BCG or anything like that. But they got a lot of smart people that understand how to read data to find insight. They also understand when data is muddy or noisy or or dirty or whatever term you want to add there. And so, a lot of people, like, let's just use, I'll make it real. Like, people say, I'll just look at eBay sold auctions for comps,
Great.
Pull your comps from eBay. Well, okay. It's a data set, works. There's a lot of sold stuff, works, looks great. And I bet you, 85% of the world would be fine with using that. But that data, the astute folks that are listening here, would all say, well, some of the auctions are shill bidders. Some of the data is, not sold at final price. Some of people are driving the price of auctions high with no intention to pay, yada, 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 like keep that going. And so I would just, be careful on, as a listener, is not just, one, question the data set, and two, really spend time in finding the insight. And there's, clearly this podcast and the folks that you guys are having on, I listen to, there's a ton of insight from here. What I always say though is, you want to hear something 2 or 3 times before you really become, dive in. And I like to say where there's smoke, there's fire. What I say may not be true, but maybe, 1/10 of what I say, will get you where you need to go. If you keep hearing things over and over again, you probably want to pay some attention to it. And then also, as more institutional investors move into the space, look at their portfolios. Like I always say that the easiest way to predict the future is look at a venture capital fund's portfolio. Look at 10 of the top venture capital firms. Look at Sequoia, Andreessen, Union Square, Bain Capital, et cetera. Look at all of their portfolios and look at where they've invested. Then pull up a little bit, try and bucket the companies into theses, and then just use that thesis. Like it's not hard to predict the future when you think of it that way. And so from a sports card space is go look at the funds. Where are they putting their money? Alt will tell you, maybe, Attic Investments will tell you maybe, their founders are out always talking about stuff. Like just go listen to what they're saying. That's where their dollars are going.
Any Pokemon in that collection?
I don't. My son has a bunch of Pokemon stuff. And I've got a good friend named Kid Breaker, and he breaks on loop a whole bunch of Pokemon, and I help him out a little bit because he's like a 11-year-old breaking stuff. And so, but I respect it. I love art, and Pokemon's some super cool art. So.
Love it. Darren, this was a pleasure. Where can people find you?
So
you want to be found. That's right
there
on Twitter. Darren is a great Twitter follow. He's a very.
I got D Herman 76 on Twitter, or Midlife Crisis Cards on Instagram. And
thank you for spending some time with us on another episode of the Luka's Tigers and Bronze Oh My podcast. Do us a favor and subscribe. You know what? Don't just like and subscribe. Everybody does that. If you like us, tell your friends, tell your neighbors, tell your enemies, tell everybody. And we hope you got something from spending some time with us today, and we'll see you next time. Thank you.